The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. Don't know the APR, don't know points paid or received. These are actual locked rates with consumers across 42% of all mortgage transactions nationwide. A lot of red on the screen today. 30-year conforming loans yesterday locked at 6.653, jumbos at 6.873, FHA at 6.619, and USDA for the rural areas, generally no down payment, 6.574. All of those were down yesterday. Jumbo was down quite a bit. The 30-year VA loan, only one that was up out of the screen, 6.397. That's what happened yesterday with OBMMI. That's their report. What's going on today? Well, 10-year Treasury's up 5 basis points. S&P 500 index is down 19.5. Mortgage-backed securities are down 19. That means interest rates are going up a little bit today. All has to do with, yes, you got it, Jerome Powell once again. Unbelievable. Idiot. So he's testifying this morning. Prepared comments. Economic activity expanded at a modest pace. Housing activity remains weak due to higher rates. Wonder who caused that, Jerome. Labor market remains very tight. Unemployment rate has moved up to 3.7, but remains low. It's only up 10%, Jerome. Are you watching that? Signs of supply and demand coming to better balance. Participation rate has moved up. Wage growth has showed signs of easing. Job vacancies have declined. Inflation has made progress, but continues to run too high. Nearly all Fed participants expected it would be appropriate to raise rates further by the end of the year. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. Continue to make decisions meeting to meeting. Not a whole lot of surprises there, but the Federal Reserve is still failing to look at leading inflation indicators like the Producer Price Index, which typically leads consumer inflation. Unbelievable. Looking at the Producer Price Index, the headline and the core rate have fallen to 1.2% and 2.8% respectively, which are multi-year lows. Back in 2021, the Fed failed to look at this leading indicator when it was rising, begging for more inflation. Got what you asked for. Yes, I agree. Such an idiot. Making the same mistake today as PPI is moving sharply to the downside and CPI will follow. Why are they doing this? Well, they're not taking into account that our economy is not the same as the UK. Well, think about it. I think the UK is smaller than Los Angeles, not a large economy. But their core inflation accelerated to 7.1%, highest level in 31 years. A lot of it has to do to their decoupling from Brexit. So their currency is not as strong. CoreLogic, their rental report. CoreLogic reported that rents rose 3.7% in April, which is down from 4.3% in March, showing that rents continue to decelerate on a year-over-year basis. This is the 12th month in a row of year-over-year deceleration, which will help inflation in the coming months as it catches up. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make that call, 800-306-1990, 800-306-1990.